In the world of investing, there's something called crisis investing, and that is done through the depth of the crisis, the depth of the recession, as the name suggests. So when the recession hits, when the economic crisis hits, then you will see some of the assets are being dumped by the market or being sold very, very cheaply at a deep discount. And those are the assets which you have to identify, get into the market and ride the wave, because when you come out on the other side, you will see how much wealth you have built by buying those assets which are being sold at a deep discount. One of the assets that I'm looking at right now is commercial real estate. Right now, it is the most hated asset class. Nobody's buying it. It's being sold cheaply. The REITs are, skipping their dividend payments. And the reason is, since pandemic, this has been the hardest hit area, especially the office buildings as well as the retail plazas. And the reason is, when you shut down the global economy, when you lock people in their homes and send out the checks to spend money without getting them to work, you actually get something different out of that. So you don't expect the economy to come back with the same sort of behavior. Because when you shut down the economy, when you restart the global economy, global supply chain, you don't expect things to go back to 2019 level. And the reason is because people's habits have been changed. Their buying preference have been changed. Their travel preference have been changed. Okay. Before, people used to be in the office 5 days a week. They were buying lunches and dinners and drinks and going out with friends and colleagues. It's not happening anymore. Now people are staying home in 2 or 3 or 4 days in a week. So their buying preference are changed accordingly. So don't expect things to go back to 2019 levels. That is also very valid in the world of investing. When policymakers and hedge fund owners and portfolio managers thinking about we will go back to 2019 levels, they are working on a wrong investment strategy. They don't have the view towards the future. And this is where I think we are seeing the crisis being unfolded in the commercial real estate, because the offices are struggling to keep the people in the buildings. The companies are canceling out leases. They are basically not able to bring their employees back into the office. Even if they are, they're only going to back into the office for the part of the week, like 2 days a week or 3 days a week. So when you look at the occupancy, it's like a bell-shaped occupancy in a week. So the office buildings are busy during the middle of the week. There is nobody in the office at the beginning of the week or at the end of the week. That's typically happening as part of the hybrid work strategy. So when you look at that, even in Canada, the vacancy rate has gone up to 18% in Q3 as per CBRE statistics. And when we look at the overall capital investment in commercial real estate, that has come down 57% on annualized basis. If you look at the global commercial real estate market, the overall volume of sales has come down 50%, both in North America and in Europe. And especially Europe has been the hardest hit region, especially Germany. They are struggling with the real estate crisis, both on the residential side as well as commercial. One of the reasons why the commercial real estate is struggling is when you have the occupancy rate going up, when you have the cap rates not favorable, then what happens is it impacts the net operating income. And when you have lower net operating income, that affects your valuation. And when your valuation goes down, then the lender will not be able to offer you 80% LTV when you go for refinancing. And keep in mind, most of the commercial real estate financing is done on a short-term basis, typically 2 years, and mostly done on a variable rate. So if the landlord has financed the commercial real estate in 2020 and 2021 when the rates were super cheap, and now they have to refinance it and roll over the debt, now they have to refinance it at 6% or 7%. So the overall debt servicing cost has gone over the roof. So it will impact the profitability, the net operating income, which will impact the valuation. And when the valuation goes down, then the lender may not be able to offer you 80% LTV. Maybe they will give you 60% LTV. So the landlord has a big hole to fill when it comes to refinancing those buildings, right? So some of those landlords will be pushed to sell those assets because they cannot keep up with the debt servicing cost. Another important thing is when it comes to do the valuation, you look for the comparables. You look for the closest comparable sales. But when you don't have enough volume, as the number of sales volume has gone down, then it's very hard to do price discovery. It's very much possible that the value of a real estate building has even come down lower than what the market knows about it, right? That's the complexity we are dealing with. But at some point, these assets will start bouncing back. When? I don't know. I think you have to keep an eye on it. So I am looking at it as like a hawk, shortlisting this asset as one of those assets that I have to go back in when the time comes. When I think that this is a time to go into that market, I will definitely use my dry powder and buy some good REITs which are producing good dividends and have been sold at a discount right now. I don't think those commercial real estate buildings will be demolished, all of them. So what will happen is, and this is my just thesis, right? What will happen is the businesses which are leaving that area, it will be replaced by some other type of businesses. We don't know what that business will be. So this is a natural cycle. When one type of tenant goes out, the other type of tenant will replace them. The business cycle will be restarted. The tenants will be replaced by other type of tenants. Their lease structure will be a little bit different. Their pricing will be different. It will be something very different which will drive this business forward. As an investor, you have to identify those asset classes, just like commercial real estate, and look for the opportunities which will allow you to get in, ride the wave, and come out of it with some solid gains. And this is just one example. You should be looking at other asset classes which are being hit hardest, which are being sold at discount, and giving you the opportunity to get into the market right now. And when the market recovers, you ride the wave and you build the wealth along with that. If you are a small investor, you cannot purchase the entire building, then you can look into real estate investment trust ETFs, or REITs in short. That will give you the opportunity to have the access into that asset classes. Those REITs actually offer you some good dividends as well, and then the opportunity to grow as the asset class goes up. As the economy recovers, those asset classes will go up and you will be getting some appreciation as well. If you want me to share what REITs I'm looking at, let me know, put your comments down below. And if you want me to cover other asset classes for the crisis investing, you let me know in the comment section and I will try to make a video about that. And if you like this video, give me a thumbs up, subscribe, and I'll see you in my next video. Take care.